In 2008, 25 UK banks went bust and we had a massive financial meltdown. You know, my son had a meltdown yesterday because I didn't let him watch the other half of Pirates of the Caribbean. He wasn't happy. But this was an even bigger meltdown. This month, the UK government has quietly introduced over 30 changes that I can only describe as a massive handout to the banks. Very few people have clocked this, by the way, but we have literally just been primed and loaded for the next financial crisis. You're going to want to hear this one. It's pretty bad. And by the way, folks, this is not just some up in the air, airy-fairy stuff that only affects the financial sector. This is going to affect my money in my bank account and your money in your bank account. Watch until the end though, because there are some steps that we can all take to mitigate some of the fallout that we think is going to come out of this. The 2008 financial crisis really was terrible. 3.6 million jobs were lost, 6% of the economy wiped out, 25 UK banks went bust, 445 US banks went bust. The culprit was our financial sector and the shocking, near criminal things that we let them get away with. In the next section of the video, I'm going to explain to you why we're on the treadmill to the same horrible destination. But first, because it's important for the explanation, this is how banks work and this is how they screwed us over in 2008. Let's dive in. To the whiteboard. Firstly, what happens is we deposit money into a bank. Bank has assets, liabilities, we put the deposit in, and the bank then uses that deposit of, let's say, £4 to pop a bunch of loans into existence of £100. These banksters have the power to create loans based on our money and then be able to charge that out on interest and make a profit on that interest. And there was a reason why these banks really didn't care about who they gave that money to, because they had a trick up their sleeve. Because what they would do is they would package all of these loans together into a security, let's call it a package, and they would sell that package to another gullible chump, aka another bank. That bank would then use financing and other financial magic to create a new package, and then they would sell that on to the next chump. And this merry-go-round would go on and on. This sick game of confidence would continue until at one point or another, someone realized that actually no one was wearing any clothes through this entire transaction because the home loan that had been given was not something that this guy could actually afford to pay. And no one had checked because no one was actually holding the buck. So now what happened was banks panicked. All of this stuff was worthless. All of these assets, because a loan is an asset for a bank, now became worthless and they were wiped out. And so as a result of that, they started panicking because the difference between their loans and their deposits shrunk. And now people were worried. Customers were worried and they were potentially wanting to withdraw this money out of banks. But the problem was banks had even less money coming in than they normally did. And so they were really facing a potential bust scenario. Facing a complete collapse of the financial system as we know it, the government now had to step in. They used taxpayer money to ultimately bail out the banks and prop up their balance sheets so that the banks could once again kickstart the loan issuance and kickstart the ability to be able to repay customers for their hard-earned cash. But the thing is, the banks weren't the only ones to blame. They were just following the rules, of which there were very little. So the regulators, they had to now come up with a new set of rules because they belatedly realized that £4 is probably not enough money to be able to issue £100 out. And they said, actually guys, let's make this £8. Now we're going to be really safe, aren't we? These checks and balances were long overdue and stopped way short of where they should have got to. But thankfully, we now had some protection, at least, until this month. On December the 9th, Jeremy Hunt, the current Chancellor, previously famous for screwing over our NHS, announced that the UK was going to take advantage of being outside of the EU now and make a series of reforms of our financial sector. Presumably, the need to stimulate our financial sector was caused by how wonderful Brexit has treated our UK economy. These changes include getting rid of the requirement to segregate retail assets, i.e. you and my money, the safer stuff, with investment banking activity, the higher risk stuff that a bank does, mixing all of that together for the benefit of the banks. Another change is putting into motion plans to reintroduce naked short selling. Even the name sounds pretty dodgy. Another big change that they're introducing is getting rid of that personal and financial responsibility that finance bosses would previously have to take for anything that goes massively wrong on their watch. The fact that banks can quietly use your money to be able to make a ton of loans that they then lend out and make a ton more money off is obviously a bit of a scandal. But because of these regulators, this entire thing was now ring-fenced, where if you're dealing with customer deposits, i.e. current accounts, savings accounts, that is going to be kept completely separate to a bank's high-risk activities when they're trading and making other kind of derivative-based transactions, etc., etc. But now the new regulations that are coming in are effectively saying that the bank can see this bit of the bank and this bit of the bank as the same thing, and any deposits that are made can actually then count towards the money that a bank could use to make higher risk investments in the stock market and in the money markets. This whole thing is going to substantially increase the risk that we face as an economy, and particularly for our bank accounts. Because if all this stuff goes bad, which historically banks have shown us consistently they mess this up, then that is going to lead to the same kind of scenario that we saw earlier, where the bank assets reduce and the banks ultimately have to write them off, and then the banks face bust scenarios, and then the government has to come in and bail them out. We are literally following in the same footsteps as we have done before. Getting rid of ring fencing of customers' deposits makes them much more at risk of losing that money at precisely the point in our economic cycle when we are going to be most under strain. Banks, of course, are absolutely gleeful. They're loving this stuff because for them to grow their business, they need access to cheap capital.
Retail money is money that is simply not from institutions, governments, or corporations or ultra high net worth individuals. Simply put, it's money from ordinary folks like you and I.
Thanks for that, Khizr. Now back to it. And there is nothing cheaper and easier to use than someone depositing money at a bank account and not even charging you anything in return for that. What more could you ask for as a bank? Next on the block is naked short selling. Short selling is basically this concept where you would borrow stocks from someone that is holding them long term and then sell them in the market, hope that the price drops, buy that stock back, and then give it to the person that you borrowed from. Effectively, you would profit from a stock falling in price. Now look, there are all sorts of ethical issues with profiting and wanting a stock price to drop, but the big one for us as Muslims is that Islam does not allow you to buy and sell something that you don't own. So you couldn't borrow something and then go and buy and sell that, for example. Imagine if you go to your neighbor and you say, Bob, can I borrow your car? Borrow the car, and you go and sell it. I can't imagine Bob would be very happy with that, would he? Well, the government is now arguing that you don't even need to borrow the stock in order to sell it in the first place. What? Like honestly, at this point, this is just stupidity. I mean, what was he smoking when he came up with this? If you are not even able to know that you can borrow something, never mind own it, and you are agreeing to sell that thing into the stock market, that's just gambling. That's so far removed from actual economic activity, it's bonkers. The third potential reform is the way that rich finance bosses are going to be held accountable or not for anything that goes wrong within their corporations. The idea is that technically before, with the regulations in place, the SMCR regulations, they were on the hook personally and financially for any massive screw-ups that happened within their companies. In reality, one of the big challenges that we have with the financial sector is that it's really hard to pin the blame on any one person. And actually what ends up happening, if we look over the last decade and a half, we had a financial crisis for heaven's sake, and the people at the top got away with it scot-free. I don't see any major banker going to prison for the stuff that happened. And surely someone somewhere was responsible for the massive screw up that happened, right? But no, the only people that end up actually going to jail are the minions that the senior guys can pin everything on. And unfortunately, that's the way the system works. So at a certain level, this reform is not completely stupid. The government has said, look guys, this is not working. We're clearly not catching anyone by doing this. So why don't we just scrap it? So far, so good. Now, what you would expect a normal human being to say after that is, but of course, we do want to have some kind of regulation that does make these finance bosses pay for major screw-ups that destroy the entire economy, right guys? But that's not what's happened here. What the government has done here is say, let's get rid of all of this regulation and let's just carry on, guys. No need to have any regulation at all. What this means, folks, is that the UK government and Rishi Sunak have done an absolute solid for their banker mates, and our money is much unsafer and more at risk because of it. And this is not an idle threat, guys. We have literally lived through in our own lifetimes at least 2 financial crises, if not more than that. This happens every decade, and we're now enabling it to happen again. So how do you, as an everyday person, stay safe and make sure your money is as protected as it can be? Well, the first thing to know is if you were thinking, let me escape from the UK and go to the USA or the Middle East or wherever you want to go to, unfortunately, it's not that simple, because all of those countries have got their own financial lobbies and they're broadly speaking making similar moves every so often as well. And moving to another country is often not an option for most people. So here's what we suggest you should actually do. The first thing is knowledge is power. Clue yourself up so you know what's going on and so that you know what to look out for. We've included a bunch of resources in the description below, so get yourself reading into that. Secondly, add your voice to the economic or political debate. Make sure you ask questions of your MP, write into newspapers, make a fuss on the comment section of the Financial Times or the Guardian or whatever you read. Do something. Thirdly, make sure that you spread your money across multiple banks, because it's very unlikely that all of them will go bust at the same time, though not impossible. Fourthly, if you're going to be choosing a new bank, give preference to those banks that don't have crazy investment banking departments and focus on the banks that just focus on the retail activity. And finally, ideally try and hold as little money as possible in long-term savings within a bank account. There are multiple reasons for this. The first is it is unambiguously going to be used mostly for haram transactions that, if you can avoid it, you might as well not be part of. Secondly, if you leave your money in a bank account, inflation is going to eat away at it, and even if you do get the interest, which is haram of course, it isn't going to cover the amount that you're losing because of the inflation rates that we are seeing right now. And then finally, if you take your money out and you invest it in productive stuff, hashtag curate capital, then you can actually make yourself a long-term return as well, and it's better than sitting stagnant in a bank account. That's it for today, folks. For more videos like this one about how the economy works, check out this other video that we did before. Until next time, assalamu alaikum.